questions. We're going to be addressing some questions that we've received over the week in regards to our last show, but if you have a question, feel free to send it in. We'll be more than happy to address it. Today's show is going to bring us back to the CARES Act. We're going to readdress a conversation we haven't had for a couple of weeks about what all that was involved with the CARES Act and of course, that PPP loan. Don Malott from Malott CPAs here in Cincinnati is one of the managing partners, and I am so excited that he's here because who better to have come in than somebody who's so far into the trenches, who's probably doesn't even have enough time to really do this for us, but out of the goodness of his heart, he's coming in because his clients are very important to him, and their concerns and questions that he's dealing with have to somehow cross over with what some of you are experiencing. So we're really hoping that, again, you will be able to glean some great information from his comments and his information today. But then one of my favorites and one of the show's all-time favorites, we've got Scott Warwick back from Scott Warwick Employment Law Services. And our topics today are gonna kind of range from one side to the other. So sit back, grab your pencil and paper, because as we have told you over and over again, we want this to be as relevant as possible for you, and we are going to have some to-dos for you today. So let's just get right into it. Scott, welcome to the show.
Thanks for having me back. I always look forward to it, have a good time, because it's rubber hits the road. So yeah, we'll just talk about whatever you want to talk about, because you couldn't, with this COVID stuff, you couldn't possibly hit a bad topic right now.
No, but you know me and clarity and relevancy. And one of the biggest things that caught me this week was this news release that came out from the Ohio Department of Job and Family Services. And if our viewers did not see this, it's titled Pandemic Unemployment Assistance Program Available. I actually had it forwarded to me as soon as it came out, and I instantly forwarded it to Scott and another friend of mine who's been on the show, Carl Ulrich, and said, guys, you've got to read this. You know, I know that they meant well with this, but Scott, if I'm confused with some of this, our viewers had to have been if they saw it.
Oh, I promise you. And I got calls on it as well. And let me just tell you, I've been posting, we'll talk about PPP money. I mean, actually, this works out pretty well because I got PPP money because basically the government is paying me to put out all this stuff for free. And I'll tell you, you've got to be real anal to read some of this stuff. So something's got to be wrong with you if you enjoy reading this. And that's what I've done. And let me just tell you, it's all posted on my website for free. I've got some different clients that are using some law firms and things, and there's passwords to get in. And, you know, that just strikes me wrong. This is a pandemic. Okay, we're all in it. I got to keep you healthy, and that keeps my son healthy, who I just flew back from Chicago this morning. So, you know, oh yeah, I sent him a whole package of rubber gloves and the sanitizer and told him exactly what to do. So if you do go to scottwarwick.com, there's at least 4 hours of free videos for you to listen to on all kinds of topics. Okay, so when Pandy called me or shot me an email, I remember seeing this, and basically what the Ohio Department of Health reported was that you can get unemployment, and it says verbatim, the individual has quit his or her job as a direct result of COVID-19. Okay, well, that is like telling you the title of the greatest story ever told. And it's kind of stopping right there. All right, so you think it's about, you know, Civil War, it's about whatever. Yeah, they didn't tell you anything, okay? If you read the regulations, and I've got these materials, there's a few different videos. One is on the Families First Act. One is on the CARES Act, which I just updated last week because they changed some of the pandemic unemployment stuff. And Ohio just went online last week with this stuff. And one of them on the video that I want you to show your people, because OSHA is requiring training. And it's like, well, what do I train them in? We sit them down, play the video, and talk to them about it. Well, in those materials, this is what it means, okay? If somebody quits their job, okay? What this means, and I'll just give you right from the regs, an individual was diagnosed with COVID by a medical professional, not your neighbor. And although the individual maybe no longer has COVID, the illness has caused complications that would basically render you disabled. So great example. I've got a very, very close relative of mine that spent 30 days in OSU Medical Center, 15 days on a ventilator. And so now she fits this perfectly because, okay, you're all recovered. Her lungs will never be the same again. They'll never be the same again. So she will have a permanent disability going forward. So you see, this is not a real low standard, but think if you just read, you quit your job because of COVID. Well, that's like, oh, I'm really afraid to go in. That's not what it is. And the other one is the individual has quit his or her job as a result of COVID because they tested positive, and the medical professional says they are, but they can continue, but they are not able to continue working activities like telework and things like that. That's not possible. But you see, both of them are dependent on you having been diagnosed with COVID previously. So it's very, very misleading, Pandy, when you just read the Ohio Department of Health's report, because they just put that one sentence in there. And I have gotten a lot of calls, a lot of emails from my people. Well, what if they just don't want to come back because they're afraid? That's not it. You got to have some serious, serious medical issues with COVID to quit your job because of.
And we know that this is happening because it doesn't matter what industry, it doesn't matter what size of company you have. We're seeing the resistance of individuals not wanting to come back to work, and that was one of the biggest concerns that we've said on the show a number of times. We're not endorsing that you use the FFCRA programs for fear. They were not designed for fear.
No,
they are not geared towards fear in any way, shape, or form. One of my clients had an individual who has had cancer in the past, went to her doctor. The doctor wrote her a slip. Yep. Again, a doctor slip saying the individual needs to be in quarantine for at least 2 to 8 weeks.
Right.
And the employer backed up and went, no, she can telework for us. I said, well, if she doesn't want to telework, she's not going to telework. She's got a doctor's form. So these kind of questions are going to come up. And as businesses open up and start trying to bring people back in, that was one that really caught me. I thought, oh my gosh, if this hits the streets, and how many times have you and I said, perception is 99% reality.
Oh, the whole world is
perceive this.
Yeah. If you don't believe that, watch Fox for a little bit and then switch over to CNN. I mean, the ability to take the same set of facts and twist them around for one way or the other. I mean, it's a magician. It's Penn and Teller.
Exactly. So now let's move over to the individuals who are coming back into work, because the questions that I got this week for us to address are all kind of headed towards the same direction. And it's what do we do? What do business owners do when we've got an individual who comes in? And again, we've talked about this on the show. We want that self-reporting. We want the employees to come and self-report what's going on in their lives. And again, the EEO, we've talked about this. The EEO is giving you some very specific questions that you can ask your employees outside of the guidelines that we, of ADA and such because of COVID. Right. But when we have an employee who comes and says, look, I've been exposed, or my wife or spouse is testing because they've been exposed. The employer is saying, okay, I've got this information. So now what do I do with this information? This individual should self-quarantine, but do I have a responsibility to talk to the rest of the team? Do I need to let the entire company know that we've had an exposure in-house? And I've got very specific opinions about that, but what do you think, Scott?
Well, first of all, let's just deal. And again, I like the way you phrase these things, because we could go in so many directions as to recognizing the symptoms and things like this. But here you got a very specific instance where, yes, let's just say my spouse was exposed to COVID. We know that. Okay. And maybe my spouse tested positive for that. Okay. So just because you know somebody who tested or who was exposed to COVID, that's not alone going to get you off work. Okay. But let's just say, hey, was it Von Miller, football player, tested positive for COVID. So let's say you're married to Von Miller, or you're his kid or something like this, or maybe his parents have moved in. I mean, I'm sure he's got room in his 10,000 square foot mansion. So the parents moved in. So mom works for you. She comes and says, my son, I live with my son was exposed. Yeah, boom, there you go. You're going to be quarantined. That is going to be covered under the CARES Act. That is going to be unemployment. Now, it also has some ties into maybe families first. And yeah, the families first, it's all backwards. It's anybody with less than 500 employees. Well, that's all but 2 or 3 of my clients. Okay, so that's 95% of everybody in America works for somebody with less than 500 employees. So I got a specific instance where somebody has been testing positive, they're related to them. Okay, that's a quarantine situation. Let's just clear one thing up too. It's not HIPAA. It's not HIPAA, because I mean, oh my God, that violates HIPAA. No, HIPAA only comes from a doctor, from an insurance company, or a third-party administrator. That's it. That's the only parameters of HIPAA. But the employee has come to you and told you that they've been exposed to COVID. Okay. Well, have we had employees exposed to COVID? Yes. Has the EEOC, and I tell you, if anybody's been to the grocery store anywhere in America, including Alaska, where maybe you've been exposed to COVID. I mean, you've been exposed to it. So it's like, oh, I've been exposed to COVID. Well, who in the heck hasn't? Okay. And again, just think of the hysteria that takes over. I put my son.
That's it. That's exactly.
Very simple. And it's like, oh my gosh, such and such was exposed to his brother-in-law who knew somebody that had COVID and their cat died. No, that's not it. And let me just give you some good rounders here, because you're right, Pandy. Perception's everything. We want to deal with these fears. So I'm going to put my son on a tube where they're going to breathe recycled air. Okay, so what did I take comfort in? First and foremost, the number one way you catch COVID is you touch your fingers to your face. Number one. And people, on an average, touch their face 20 times an hour. Okay, so right there, you eliminated 90% of your threat. Then you wear the mask. Why? So you don't breathe on people. And just in case someone comes up to you and breathes on you, it's that moist air. Okay, so it's not, as far as we know, it's not airborne. And airborne is, it'll just hang in the air. As soon as the moisture evaporates, it evaporates. And so the airline put all new HEPA filters in. So even if it does go up into the recirculated air, it's going to hit the HEPA filter. So, and I told him, you spray down everything before you touch it. Now, why is that important? That's what you tell your people who are coming back to work. It's more of an employee relations. I went down to issue than anything else. I went down to Marietta, one of my best clients ever, down in Marietta, and we were seeing these guys off for a 30-day trip to North Dakota. And Marietta is probably the hottest spot in Ohio right now. Okay. Yeah, very hot. And I think it's because of the nursing homes or something, but per capita, it's very hot. Didn't worry about it at all. I went down, had my mask. Everybody was 6 feet apart. My client had a nylon bag for each and every guy that was going. And these are big, rough, tough, I think of them as like being sort of in the oil drilling industry. Okay. They're just, really blue collar all the way. You should have seen these guys going through. They each had their own hand sanitizer. They had their masks. They had Lysol. They had all this stuff. I suppose it cost my client maybe $10 per person, maybe, to put all that stuff in there, tops. Oh, you got $500 per person return. So you got to address these fears. But no, it's perfectly fine to say, well, such and such, was exposed to COVID. So the EEOC has said that's not going to be an issue for any type of disability. Now, what don't you want to get into? Oh, yeah, Bill got COVID. He's recovering. His lungs are shot. He has diarrhea. He's got, okay, spare me. Okay, yes, he's been exposed to COVID. And quite frankly, if there are no limitations, this is like good ADA advice anyway. And I'll tell you, all this stuff, I went through and redid my videos. I got like a 5-hour college course on the ADA and a couple things in there. Look, it's still ADA. You get COVID, you don't recover fully. Now you're back to good old fashioned ADA. See, it's not the COVID. It's that it destroyed half my lungs.
Well, let's stay with that, because that's where my hesitation comes in, and I try to kind of slow them down, my clients down. You've got to, if you want to react on facts.
Yes.
You cannot assume that just because the individual walked in and said that they were exposed, that they automatically have it. And you need to control what you can control. And if it's your communication to the employees, then by all means, don't communicate more than you need to.
Yeah.
Obviously, we want to protect the entire workforce, but if you start the basis of a rumor,
Yeah.
oh, those employees will take it and they will run. They will love whatever information you can give them in terms of taking or developing a rumor. And then the fear will be harder to contain, let alone stop. So
yeah, you're right. And this is one thing I've really discovered is that in America, we are woefully uninformed about the ADA. Woefully. 3/4 of all the questions I get are just good old-fashioned ADA. See, it's not COVID, but think of it like MS. Oh yeah, and I'll tell you, news like that spreads anyway because people just blab and that's juicy. Well, such and such got MS. Okay, great. It's not like I don't care somebody has MS, but it doesn't matter. All that matters to me is what are your limitations, and your perfect answer is what can we do to help you. Okay, so MS is you don't go into detail. Oh yeah, such and such can hardly see, they can hardly talk. No, everybody knows they got MS. There is no reason for me to go share all the grisly details of COVID, just the same way as no reason to share the grisly details of MS. That's what's going to get you in trouble.
well, and let's caveat off of that. That's a great line into the next one because we talked about the EEO questionnaire last week and doing that every so often, just even if nothing else, to find out if your employees are traveling on the weekends, going into hotspots and need to be quarantined. And I know that some of that's lightening up a little bit, but I just want to emphasize too, and please chime in, Scott, be very, very cautious if you alter the questionnaires that I'm using and I'm sure Scott's using, and you start asking specifics of the symptoms. I had one client who got very overzealous, and she's so thorough and she's so conscientious, but she literally listed all these symptoms, including digestive issues, which is such a slight symptom. And so what happens, her employees come up and say, one of them in particular said, oh, well, I have IBS. And so he started volunteering all these health issues that he has.
Oh yeah.
She doesn't want to know. You don't want to know that stuff.
Yeah, people would be open about some of this.
Oh my gosh. Absolutely. And again, he knew best intentions on her part. He trusts her completely. But the point that I'm trying to make is just leave it open-ended. Are you experiencing any symptoms? Don't ask a lot of specifics because that's giving you information that you really don't want.
Right. You hit it right on the head, and think of the common sense. I usually do not compliment the government. Okay, just as a rule of thumb. But I will tell you, I love OSHA's thing. And I'll tell you, it just really amazes me. Train your people. OSHA's telling you, train these people. And exactly like you're saying, well, if you don't have a fever, you can come to work. You've got to be kidding me. Okay, there's like 3 people in the United States that still believe that. Okay, the OSHA has adopted, whether the government is going to adopt the CDC's recommendations, this kind of slid in behind. OSHA has given you a list of things to talk about in training. And the reason being is they're saying, you got to make sure your people, like one of them, that you have to talk about with your people. What are the symptoms? Well, if you tell your people what the symptoms are, then they can self-monitor. And yes, fever, 100.4, absolutely. But also on that list is gastrointestinal issues, absolutely. Headaches, muscle cramps, okay? So got a headache and it's like, oh, I got a headache really bad. Think it's COVID? Nah, it's just a stroke. I mean, there's something wrong, okay? So honestly, here we are. Okay, you have a headache, call off. Because maybe if you've got this headache going on for 2 or 3 days, then maybe you should get to go see a doctor, and it could be COVID. Blue lips is on that list, and it just amazes me. It's like, look, if you're sitting there at work and your lips start to go numb and your taste goes away and you go to the bathroom and your lips are blue, you hope it's COVID, okay? Because your face is dying, all right? You're not getting oxygen to your lips. And so you can take the onus off of your managers and supervisors by having to come around. Somebody's on a coughing jag or something like this. They should self-monitor. And part of that training absolutely positively has to be telling people, if you are sick, stay home. John Wayne, pull up your bootstraps type of thing. No, those days are gone. You don't come and infect everybody else. So I think you and my clients and your clients, I think they can give themselves a break by, making sure you're communicating this to the employees ahead of time.
Well, and Scott, let's give them permission too, because a lot of businesses will look at me and go, but he doesn't have any more sick days and he's already exhausted all of his vacation, or he doesn't want to use a vacation day. Look, as an employer, you can pay your employees for anything you want. If you want them to go out and sweep the front porch, you can pay them for that. If you want to pay him to stay home with a high fever and sing happy birthday to you on the phone until he finds out it's COVID, you can do that. It's your budget, it's your money, it's legal. So it's amazing what little things come up and we get really concerned. So let's kind of move on to the next big question, because with all the remote workers, you and I touched on this here a couple of weeks ago, the number of oversights or I don't want to say, let's just say errors that people are making or things that they've forgotten in regards to remote workers when we're dealing with those non-exempt employees.
Yes.
Guys, if you've got non-exempt employees and they're working from home, I'm thrilled. I'm really happy for you. Scott and I completely agree. That's totally okay. But the Fair Labor Standard Act does not go away. The Fair Labor Standard Act under the Department of Labor and Wage and Hour have not changed the rules under COVID. So let's go over what those rules are. And here's where your paper and pencil comes back out, because these kind of errors will cost you. A wage and hour audit will go back 3 years. Just be reminded of that.
Oh yeah. And excellent point. And this is the thing, is you've got what's going on with COVID, and think of that as just sort of being the island, okay, that we can see right now, and that's what everybody's antennas are up to. Well, underneath that island is a huge mountain, okay? Fair Labor Standards Act, FMLA, ADA. And this is very fresh in my mind, because I am getting so many calls where I've got so many clients that are just violating the good old Fair Labor Standards Act. And remember one thing too that came in when everybody's sort of overshadowing this, we had a huge change to the Fair Labor Standards Act at the beginning of this year, January 1st, where minimum salary went up from $455 a week to $684. So now you got that you're dealing with. And I've run with everything else that's going on. I got some clients, I got these salaried exempt people. So I'm just happen to mention, okay, what's their salary? Oh, they're at $550 a week. Oh, no, God. Okay, well, guess what? Now you don't have one problem, you have two. Okay, so so you see these potholes we're hitting now. But I'll tell you, the biggest number one thing is, if you are at home, at work, you're at work. And if you look around my office is in my home. And so people have strict orders. If my door's shut, you stay out. I mean, the place better be on fire, okay? But understand, when you're at work, record those hours for these non-exempt people. You've absolutely got to. It's just like they're at work. And do you have to take their word for it? Yes.
Thank you.
Absolutely.
Thank you. It's actual hours, guys. The regs say actual hours worked. And that means even if they take a break for 2 hours in between and then they come back. And Scott, continue, because we're talking about emails, we're talking about anytime cell phone. I got a call this morning at 4:48. Somebody wanted to ask a question. That's okay. I tell my clients 24/7. But the point is, if I had got a non-exempt employee.
That's kind of funny. It happens. Usually I would have a bad accident or something that somebody has called that they're 3 shifts or something. But that's a great example. Let's just say I've got, and let me tell you who, like, folks have been telemarketing for years, or not telemarketing, but telecommuting, medical transcriptionists.
Oh.
Okay. And understand the world of the ADA is changed. I'm voicing some of the videos there, because the world will never go back to somebody saying we can't possibly telecommute.
Right.
If you could telecommute during COVID, you could do it now. So that's going to be an ADA accommodation, most definitely. But I got to record those hours, and maybe somebody's recording 1 to 3 in the morning. Well, that's okay. They're at home. They're recording those hours, and you'll hear from somebody, well, I know they're not working those hours. Well, first of all, if you're going to let them telecommute, then you better be watching them. I did have one case where somebody was not real bright, and imagine And the employee was reporting all these hours working, and somehow they could see that the person was on the computer, on their laptop from the company, doing some unscrupulous things for a couple of hours. Well, okay, now I got you. Okay, yeah. And so I got you. But honestly, telecommuting has always been a privilege. Wage and hour, if I suffer, and you got to think of it this way, this is exactly what wage and hour says, Fair Labor Standards Act. If you suffer, which means you make them, you know, like the old Egyptian Charlton Heston thing, if you suffer or permit, so you gave the laptop, they're going to work at home. Yes, because I'm going to have them get stuff at home. We got to get this done. Okay, you're permitting them to do that, and that's a privilege. And actually, I think some of the studies have showed that our efficiencies have gone up by 54% because you cut out all this telecommuting or driving back and forth to work. So, wage and hour, recording of hours still counts, and God help you if you have people who are misclassified for any reason. They are not exempt. They are non-exempt, which means they should be getting overtime, and they're not recording their hours.
And let's be truthful. There's so much confusion around that. I am going to promote myself a little bit. Get a second pair of eyes before you are sitting back and feeling really comfortable with the Fair Labor Standard Act.
Yeah.
Get with your consultant, get with your labor law attorney, and let's go over those regs so that you're absolutely sure that and remember, the Department of Labor is not going to be going off that job description, but it's what they're actually doing during the day and how much time they're spending on it. Very quickly, I want to add one more thing that it just happens all the time. And Scott, I know, but these individuals, these non-exempt, please, if you're an employer, do not automatically deduct a half hour or an hour of lunch, assuming that they're doing that.
Right.
And I have clients that I'll go in or prospects that I'll talk to, and they say, oh, well, we just automatically take out a half hour because, they're busy, and we just know, we tell them they have to take a half hour, so we take it out. You can't do that.
And that's going to be an expensive one, because if you're doing it with one person, this goes to several people for 3 years. Let me tell you, this, sexual harassment is real. It's glitzy. That gets the front page. You will never see a front page article about a wage and hour. Even when Walmart was changing people's times and they got nailed for like $100 million, they just wrote a check. Okay. That's not glitzy, but I'll tell you, I am more afraid of wage and hour violations. And I'll tell you how bad this is going right now for employers. The Division of Wage and Hour for U.S. Feds and each State Department that I've seen, they are kicking out individual complaints. So if you think you got a wage and hour complaint and you call the Division of Wage and Hour, they're going to say, go get a private attorney. We can't help you. Because we're so busy that employers have been stepping and screwing this thing up so bad. They're so busy. And the reason they refer you to an attorney is attorney's fees are guaranteed. Okay, the average cost of an employment attorney in Columbus, Ohio, and I know it's higher in Cleveland, probably Cincinnati too, $400 to $450 an hour.
Boy, I'm looking good, aren't I?
Oh yeah, me too. Yeah, so
really good.
But when you start, and by the way, when you represent the plaintiff, I'll tell you that legal rate always goes up. You are going to pay that. You're going to pay your attorneys. You're going to pay the other attorney, and if they catch you on one thing, you owe it. So honestly, we're so afraid of some of these other types of things. Oh no, it's the sleeping giant, wage and hour, and I've got clients right now that and people I'm just talking to, they'll call. Oh, they are sitting ducks. They're birds on a wire.
And that could be another whole show all to itself. But if we're talking about legal confusion and legal possibilities, that gives us a really good opportunity to kind of swing over to our other conversation for the show.
Yeah.
Don Malott is managing partner for Malott and Malott CPAs here in Cincinnati, a very reputable firm downtown. I've had the pleasure of working with a couple of the CPAs there, and so it's a great honor to have Don join us.
Thanks, I appreciate it.
So I'm ecstatic. You still have all your hair, and you seem like you've still got some sanity. How is the life of a CPA right now with this current situation?
More busy than we've been. Tax season was crazy through April 15th, as probably everyone knows. deadlines were extended through July 15th. So that was great. And at the same time, this PPP hit. And so we really shifted resources because the PPP is actually for many people more than the taxes, because they're running out of money. They were running out of money. They still are running out of money. And being able to get that money from the government and get that into their lifeblood, into their accounts, was very important. So we've shifted resources, and every day the rules change, as you said earlier. And so staying up on top of that, it's hundreds of hours that we're spending as a group trying to stay in front of it.
Well, what advice do you give your clients, it just so that when they come to you, they're more organized, or that they're a little bit more sophisticated with their questions? Are there shortcuts, or are there things that you're telling your clients that would help our viewers?
Well, I guess the most important thing is there's still money left, and if people have not applied, they should apply. We've told pretty much every one of our clients that we think they should apply. It's very difficult to understand how your business is going to react, not just in this 8-week or 10-week period, but how they're going to be for the next 18 to 24 months. Most people that I'm talking to, the conferences that I'm attending, the association that our accounting firm is in, are more concerned about the next 18 to 24 months than they are about this short term.
Wow.
The question is, where is this unemployment going to settle? I've talked to somebody who had an economic advisor come in and talk to their board, and he said that, probably this would settle in between 7 and 11%, that there's going to be 25 to 40% of the people that are unemployed, we're talking tens of millions, that probably won't go back to work. And if that's the case, then we're going to have a tough economy. I mean, that's a recession. So how we all make it through there, even though in the short run you feel like you might be able to make it, having that money and that dry powder could be very important. And whether it's forgiven or whether it's a 1% loan for 2 years, you can make the decision later if you want to pay it back early. But having that money available could be very important to your business. So what I'm telling people is, I think you should apply. I can tell you how to do that. The banks are ready to do that. And if you're under $2 million, which most of your clients, the size that we were talking about, will be, then this whole uncertainty and good faith application is taken for granted. So there's not going to necessarily be a case statement that you need showing why you needed it and what you thought of when you were applying, like there's going to be for those who applied for over $2 million.
And again, you're talking about the loan amount. You're not talking about their revenue.
Talking about the loan amounts. So let me just backtrack a little bit and tell you how you apply for this and how it's computed. And then that's been very hot, but now what's even more hot is how you get it forgiven, because getting it forgiven is huge. If you can get it forgiven and don't have to pay it back, that's much better than having a loan that you have to repay. So basically what they've said, this is supposed to replace unemployment. Your social contract, if you apply for the PPP, is that you should not lay your people off. You're getting this money from the government, and what they're doing is they're saving having to pay unemployment. The Fed's paying $600 a week. The state's paying 50% up to $400, $500, $600. So if you're able to save the state and feds by taking this money, you're supposed to retain your employees. So the idea is take 10 weeks of everyone's salary, their health insurance, their 401k match.
Last Thursday.
I'm sorry. And so you take 10 weeks of all of that, plus your rent, 2 months of rent, 10 weeks of rent, some state unemployment, lease payments. There's still a little bit of uncertainty as to what completely is included, but it's basically the payroll costs, health insurance, pension matching, and rent. 10 weeks of those is what you get to apply for. Salaries are capped at 100,000. So if someone makes 200,000, you only get to apply for 100,000 times 10 weeks divided by 52 weeks. So it's about $20,000. So you apply for all that money from a bank. In the beginning, the smaller banks were getting these things done more quickly. The larger banks, because they had so many customers applying, millions, were really spending their time getting the portal set up so that these could be done automatically with the SBA. Now everyone's caught up. Everyone that I know that was in a queue has gotten their money. So they've been approved, they've gotten the money, and they haven't run out of money. They reloaded this. There's $800 billion that's been put into this program, and there's still some remaining. So my point is, you need to get your 10 weeks worth of expenses together if you haven't done that, if you want to apply. And my recommendation is, I don't see any business that's not impacted by this. And I just think that you need to apply. And if you determine you don't need it later, you can always turn it in. So that's the application side. And as you've heard, I mean, things have changed pretty much daily, if not weekly. You know, originally, whatever was going to be forgiven is going to be tax-free. The IRS chimed in and said, no, we're going to make this taxable. They just didn't like the idea that people would get this tax-free money, have it forgiven and tax-free, and be able to use it to pay expenses that are deductible. So they said, basically, they're going to make it taxable by not allowing the deductions you pay with it. But as we've told our clients and anybody else who's asked, you might pay a tax rate, worst case of 50%, federal, state, and city. You're still keeping 50%. So it's still a heck of a deal. So it's important that you're tracking how you spend this. You have to spend this money in an 8-week period. From the day you get it, you have to spend it in 8 weeks. Only the portion you spend in 8 weeks will be up for forgiveness. And at this point, that's taxable, although there is bipartisan support in the House, the federal level, to try to make this not taxable again. They're not happy with what the IRS did, and they're hoping to make it non-taxable. We'll see if that gets legs or not. So you have 8 weeks to spend this. The SBA also changed the rules. Instead of saying you can use it for what we sent it out for, they're saying 75% of this money has to be spent on payroll-related costs. Payroll-related costs are payroll, health insurance, pension. So as long as you use 75% of that money you received in an 8-week period for those purposes, and then the other 25% or less for rent, lease payments, state unemployment, then all of that would be forgiven. There's going to be, after 8 weeks and sometime after June 30th, there's going to be a process where you submit for your forgiveness. The forms just came out Friday and Saturday from the SBA. There's worksheets. It's about 8 pages. It's not simple. The application was more simple than the application for forgiveness. It's something you're going to need to talk to some professionals about. Doing it on your own could cost you having some forgiveness issues, because they've also added now head count. If your head count decreases in this time frame from before COVID hit to when you receive the money, that could impact your forgiveness. And also, if your wages went down in that time frame by certain amounts, then your forgiveness will be impacted. So you have to track your employees. And if you had employees leave because they were sick or they just wanted to leave and collect unemployment, for any reason, if they were nervous and they went home, you have to replace those employees before June 30th. Otherwise, you're going to have your forgiveness impacted. And that's what everyone's trying to work through right now, is getting a good spreadsheet together so you can track these expenses. We recommend everyone take that money and put it in a separate account. Make it very clear that you're reimbursing just those expenses. When those expenses are reimbursed, you're tracking it on a spreadsheet showing exactly what you used it for, so that when you go to the bank and ask for forgiveness, you can turn all that information in and they understand what you did, and hopefully you forgive it. Whatever is not forgiven, it turns into a 2-year loan at 1%, which is still a pretty darn good deal.
Don, go back for me, because I don't know how many times I've been asked this question. If somebody wants to bring in a gig worker or a 1099, a subcontractor, to work some of these roles because they just aren't interested in bringing somebody back, or the individual can't come back, can they apply that to the PPP loan? I mean, can that be contributed towards the head count?
No, it really can't. Not a point. Things are changing every day, Pandy, but subcontractors are treated separately. In the beginning, we thought that subcontractors would count both in the application for the money and in the forgiveness of the money, but subcontractors can apply themselves. So anybody who's a contractor at 1099, an individual, like you said earlier, you have some employees that have 7 or less. Some companies have 7 or less employees. It could be one employee. I have a doctor who applied. He's a very small practice, under $100,000 of income total before expenses. He applied. He doesn't have any employees. Those people themselves can apply, just like someone who is a contractor, might be a marketing, since they can apply themselves. As they want you to bring them on your payroll. They really want you to keep your payroll. You applied based on the payroll you had at the time, really the payroll you had in 2019. They want you to keep that level the same. That's the social contract. Keep the employees that you had before all this happened. And if you shed employees, we're not going to forgive that loan. And that's what you really have to keep thinking about. So you need to bring them back. They don't have to be in the same position as the person who left. If you had a highly technical person who left, but you want to bring back an admin person, that's okay. But then you might have to worry about the salary drop. If the drop in salaries are more than 25%, that's a problem too. Yeah. So there's things you just have to be careful of, but you have to think headcount and you have to think salaries. And those two need to be at the same level as they were before. And if they're not, it's going to impact your forgiveness.
Can I ask a question? Because I thought this was a very good explanation. I've got a lot of clients dealing with this. You get your PPP loan, it's 2.5 months of your normal payroll. So 10 weeks, correct?
Yes.
Okay. But the repayment, you got to be able to account to pay for that. Did you say in 8 weeks?
That's correct, Scott. So the problem is many people won't be able to spend it all. So we've worked through many of our clients, and what they apply for 10 weeks and they spend in 8, it's about 20% of what you receive you probably won't be able to spend. In that case, you're returning that money. Either that or you're keeping it and it's a loan, but it's not going to be forgiven because you can only spend it for those specific purposes. Mm-hmm. And so you're most probably going to have some of that powder that gets sent back. Now, yeah, there's more bills that are up in Congress where they want to give people a longer time frame rather than 8 weeks. They're worried. I'm looking down at the banks right now in Cincinnati, and there are many restaurants that are closed or on skeleton crews. They probably don't need the money right now as much as when they are completely open up. Right. You know, they're going to have to open up. They're going to have less people in there. They're going to have more of the things that you were talking about on your checklist from OSHA. It could be expensive for them to open back up. When they open back up fully, that's probably when they're going to need their money more than right now. So what they're trying to do is say, let's give people an opportunity to use that money for a longer period of time, especially certain industries, and still allow that to be forgiven. So that's something that's being kicked around up in the government.
Yeah, but keeping those records is key, particularly for small businesses, which are most of my clients. Getting through to them, you've got to keep these records.
They've got to keep the money separated, and they've got to keep the records. And so,
great.
You know, this is just, it's just not simple, and the rules are changing every day. And so this, even though this application that just came out Friday, Saturday is the most current application, just like the application for the funds in the beginning, that changed. And the rules have changed. And I anticipate that the rules will change on this forgiveness side too. And it's just something that everyone has to work through, but it's, we think that if you applied for under $2 million worth of a loan, let's say you applied for $150,000 and you received that. I had many clients who were worried. Mark Rubio came out and said he was very concerned about the companies who took this money and shouldn't have, and he's going to have the whole force of the United States government after those people who did that because it's not fair. So all the people who weren't going to have a total operating loss but are really struggling said, my gosh, am I going to jail? And so the SBA came out and said, listen, we are not concerned with the little folks. We're going to assume that everybody applied in a good faith estimate. And so I think I have here somewhere, when you applied for your loan, there are only about 10 things you had to sign off on. And one thing you attested to was that the current economic uncertainty makes this loan necessary to support operations. It's uncertainty. And how could you not have uncertainty? I mean, there's just so many things happening. And again, not just in the short run, but in the long run. What the Congress and SBA came out with just last week again was, if you applied for under 2 million and received it, we're going to assume that you did that in a good faith way, and we're not going to audit that uncertainty. But it doesn't mean you might not need a case statement. You still might have that. So we've been telling our clients, make a list of the clients that you've lost, of the companies that cut you off, of the ones who said, stop doing work on the floor, on our inventory. You know, we have suppliers for large Fortune 500 companies where the company came back and said, stop production. I know you fronted the money for all the inventory, but we're not accepting deliveries through September 30th. Those people are just going to eat that. They're not going to have a receivable coming in. They're not going to pay any bills for some of these vendors are saying, we're not going to pay any bills for 90 days. So we're getting stuck with this. And so there is quite a bit of uncertainty. And so, you know, there's just, they're allowing the small businesses to not have to deal with that as much, but it's still something that you should document. For the ones that are over 2 million, and we have some clients that applied that were over 2 million, it's going to be a much tougher process, more rigorous. The SBA is actually going to audit those applications for forgiveness. They may factor that out to CPA firms or someone else, because I don't think the SBA has a staff to audit the millions of people who received over $2 million, and there are many firms who have. But they're going to want to see how you used it, and they're going to want to see what your philosophy was, what your boards typically said about what your uncertainty was and why you needed this money and why liquidity was an issue. Because when you have over five, who they were going after originally, you heard about Ruth Chris's Steakhouse, and you heard about the Lakers, and you heard about some of these other hotel chains. There was some confusion about whether franchises had to be accumulated. You know, in Cincinnati, we might have one person who owns 4 McDonald's. Well, that's not owned by McDonald's headquarters. That's somebody who owns that store and has employees. He or she should probably have to accumulate all of those employees, because that's their business. It shouldn't be one separate one. If they added together more than 500, they're probably not going to be allowed. There are some exceptions to that 500, but that's what Congress is unhappy about. The people who applied that were really large businesses or public companies, there were public companies who applied, and they're going to really look very deeply at those applications before anything is forgiven. And really, you know, they printed $2 to $3 trillion to help this whole CARES Act, which from an economic standpoint does concern me. I worry about inflation for the future and for our kids. You just normally can't just print $2 trillion and that works out just fine. So the fact that it's taxable from a fiscal responsibility doesn't upset me too much, because it's a way of getting some of that money back. People are taxed in the 25 to 35% federal bracket and state and city. Some of these governments are going to get some of this money back that they printed. And it's still a very beneficial situation for the ones who took it. And they're going to get the money back that's not forgiven. The one that converts to a loan to 1% for 2 years, they will get that back. So some of this money will come back to the Treasury and to the state.
Now, Don, there are a couple of other programs out there, and acronyms are rampant in HR, so I don't even try to memorize them on the finance side. But are there any other programs that are out there that you would recommend companies looking at, and can you overlap them with the PPP?
In most cases, you cannot them with the PPP. In some situations, you can. We have some clients, 501c organizations could apply for the PPP. That's churches, not-for-profit, social organizations. They could apply for the PPP. Country clubs, other 501c organizations, social clubs could not. There are associations that could not. If you're one of those associations, or if you just chose not to apply for the PPP, there are other programs you can use. There's an employee retention credit that if people are impacted and parts of their lines of business have been shut down and they've been impacted by COVID, and I don't know which businesses might not have been impacted by COVID, then they would be able to take a credit against the wages that they're paying employees for keeping them on the payroll. So it's actually a credit against when they file their payroll tax returns. It's a credit against the taxes that they would normally pay. So that's a good deal. There's also a deferral of employer payroll taxes. So the FICA, the Social Security tax that you're paying on your employees, which is 6.2%. You know, the employee pays the FICA, the 6.2, the employer pays 6.2 also. If you are keeping those employees on, you did not get the PPP, you can defer paying that 6.2% all the way through year end, through December 31st. And that's not due. Half of it's due December of 2021 and half of it's due in December 2022.
Wow.
So those are two things that are actually very good. They're cost savings. We've had clients who said, I don't want to do that. You know, I mean, we started off the show when you talk about a few different things. The federal, state, and every state and every city basically has deferred their income tax due from 2019, from April 15th to July 15th. Then they were under pressure, and so they also deferred the first quarter tax estimate and the second quarter tax estimate for self-employed people, many of which you two work with, and probably some of the people that are listening today are self-employed people. Those taxes aren't due until July 15th. So 2019's balance due and the first two quarters of 2020 are all due on July 15th. It concerns me that people aren't necessarily escrowing that money and putting it aside, and instead possibly spending it. The market's going up, possibly putting it in the market. It just makes me nervous that they may not be setting it aside because there's going to be a hunk due in July. For the employers who are putting this money aside on their FICA tax deferral, and it's not due for a year or two, a year and a half or 2.5 years, they've got to come up with the money still. They've got to put it aside. They can't just really spend that. You know, so you got to be careful. I mean, there are other programs. You really need to understand what you're signing up for on the dotted line. Many of these are loans. They're deferrals, but they're not completely exonerating you of the tax. Now, this PPP, if it's forgiven, that's a whole different ballgame. When people said it was probably too good to be true and they didn't want to apply, in many cases, it's too good to be true, but it's correct.
Yeah. Don't get used to it, right?
Don't get used to it. I don't think it's going to happen again. We can't afford to print another 2 or 3 trillion, but there is another bill in that Congress. The Democrats have proposed another 3 trillion. I don't know if it's going to pass or not. It's widespread support, but it's going to be helping, I think, states and cities. States and cities are in big trouble.
Yeah.
They're paying a ton of unemployment right now, and they're having to borrow that, and they can't print money like the Fed. So states and cities are going to need help. Hospitals are going to need help, some social organizations. And I think that's what this next 3 trillion is supposed to do if it passes. Stay informed, keep updated. It's going to keep changing.
Well, and you know, we're lucky that and I'll just go ahead and say it now, we're very, very fortunate that ICRC-TV provides us with this setting to bring on experts and advisors like you and Scott to talk about topics like this, because as you said earlier in the conversation, this is not going to go away. And our viewers need to remember that. We try so hard to emphasize this. This is going to linger out and stretch out somehow for the next 18 to 24 months. And everything happened so fast, and everyone was trying to cram so much in such a short period of time. And now everybody seems to think, oh, well, it's going to be fine. It's not, guys. We have to stay on our toes, and it's exhausting. It's absolutely exhausting. So let me go over just a couple things that we had on the show today that are very, very important, because again, this is stuff I want you to go back this week and do your best to apply and think about. But 18 to 24 months, though the COVID pandemic is considered to be running through December 31st of this year, that means that every employer, as Scott said, with 500 employees or less, has to abide by the Family First Coronavirus Response Act, the FFCRA. Doesn't matter whether you have 1 employee or that 499, those programs apply to you. And I ran into somebody this past week who did not understand that those programs applied to them. If you don't know what I'm talking about, please get with Scott's got it on his website. Get a hold of me, get your consultant, talk to your labor law attorney, talk to him about this, because this is stuff that you have to be applying. And remember, everything that we're talking about right now is COVID related. So just as we mentioned, fear is not covered. Your vacation is not covered under the PPP, or the addition you want to put on your building is not necessarily covered under the PPP loan. So everything that's going on in this show is dedicated around the conversation of COVID-19, but it does not mean that any of the other programs like ADA and FMLA and wage and hour with the Fair Labor Standard Act, none of that has gone away.
Those are gone forever.
It is there, and we are all responsible to it. So again, as we mentioned last week, we put a strong emphasis on training last week. If you don't know how to abide by OSHA's general duty clause and COVID, if you don't know ADA, if you don't know the National Labor Relations Board, if you don't know EEO, these are things that you need to wrap your arms around now and get with an expert. We're here to help, but you gotta take the steps so that we can do that for you. I also want to emphasize that self-reporting policy, because again, all of this can make it so much easier for you if your employees are self-reporting, and that needs to be in writing. That is an actual policy. It doesn't have to be in your handbook. You actually can have a policy that is separate and outside of your handbook and still be binding. So I really want to emphasize that again. But boy, more than anything, and you guys have heard this if you're a viewer of the show, communication is everything. And I mean it when I say perception is 99% reality.
Yeah.
If you're not communicating with your employees and you're not basing it on facts, and again, we've heard it from Dawn, the facts are changing. Guys, the facts are changing. So don't be afraid to say something, because you know it might change. If it changes, okay, change is the only constant in the universe. You just roll with it. We're all in the same boat. We're all dealing with this. So communicate. And then what I always say, document.
Oh yeah.
Don just put another major emphasis on the importance of documentation. So back to what Scott and I've told you, get that cabinet or that drawer, and it's your COVID drawer, and everything COVID related goes in there. And if you don't know what needs to be documented from everything necessary with the CARES Act, as well as everything with the CRA, let us know. We will help you walk through that. Send us in a question and we'll make that a part of the show. But you've got to maintain that, because again, as we mentioned before, you're going to have to pull this out, or you may have to surface this in 18 months or 24 months to prove or support or provide evidence of, and you don't want to be digging through or realize, whoops, something slipped between the cracks. And then I'm going to wrap up the show with our last number one important lesson. Please don't try to go through this alone. As a reminder, you should have a very strong relationship with your CPA.
Mm-hmm.
You should have a great relationship with a banker. Don't alienate your employee benefits broker or your 401k broker. They're important as well, because the rules on ERISA are changing, not quite as fast, but there are some different things going on over on that side as well under the CARES Act. So keep them close at hand. And by all means, get yourself an HR consultant or a labor law attorney. Scott and I love what we do. And if you get the right one, we'll make it easy for you. Thank you for joining us today. Send in your questions. Feel free to reach out to Don or Scott at any time. That's what they're here for. We're all in this together, and we really hope you enjoyed the show. Until next week, my name is Pandy Pridemore with the Human Resource USA. Take care.
Thanks, Andy. Thanks, Scott.